Hey, what's going on? This is Liquid Levy, and I want to go over trading rules. I think I have four main, they're broken down, but there's four main trading rules that you really should live by. And those are going to be, sorry, I'm like glowing right now. I've got a white Google Doc in front of me. See, if I did that, it's so much better. But then I'm like a Casper ghost here. So, all right, whatever. So, in no particular order, you need to manage your risk and avoid over trading. That's most important. So, managing risk, you need to make sure that you have a consistent risk size. Ooh, that's pretty obvious in every trade. When you're going to take the trade, you're not half-assing the trade. The trade is your setup. It's going to work. You take the full trade every time. You wait for your trade. Got it? So, when we're risking the same amount, it's good to pick a rounded number 100, 200, 250, 500. I would say if you're just getting started, really on micros, try $100. If it's a real account, live or funded eval, try $100 risk and go from there. Get some trades under your belt, and then you can increase when you're in profits, increase to a consistent $200 risk, and then 250, and so on and so forth. Okay, pretty simple. That's managing the risk. Also, I have other classes, beginner videos, and ask me, privately of how to manage the risk in contract sizes. So ES is $5 per micro moved on the chart per point, and NQ is two. Okay, they're a tenth of the main mini contracts on the futures. So manage your risk, avoid over trading. If you take a loss, stop, take a breath, and it leads me to another rule is to journal it and document. So make sure that after a loss, you do not just chase again, you do not just get back in, because guess what? That's not the A plus setup. If it already delivered, if it's already moving, you missed it. It's too bad. So make sure that you are only taking one trade with consistent risk, 100, 200, whatever it is. If you take a loss, then stop, go out for a walk real quick, 5, 10 minutes, have a glass of water, journal and document your emotions and the trade itself, a screenshot, the confluences, all of that. And then you can take another trade. I would max yourself at 2 losses per day. If you want to go half risk on your first trades, 100, and then risk another 100, so you have your 200, there you go. It's up to you. But manage your risk and avoid over trading. Next rule would be always use a stop loss and avoid psychological triggers. So when I say always use a stop loss, when you get into a trade, you should not be setting your take profit. The first thing you should be doing is setting your stop loss. It's a lot closer. It could get hit or go further very quickly. So as soon as you get into the trade, you could even put your stop loss in technically your stop order first. It's up to you. But I enter at market buy or sell, and then I set my stop order right after. And that's going to be the close above or below that fair value gap. You could be subjective and go a little bit lower or higher to, near that higher low, that swing higher, swing low that you're trading off of. But ultimately, you will always use a stop loss, and then you will move that stop loss to break even as soon as you get to your trigger point, whether that's an internal high or low, set of equal highs or lows, or what I like to do is just the next liquidity pool. So the next bullish or bearish fair value gap. Simple. Avoiding psychological triggers, that's a very personal thing. So I can't actually coach that unless you're a mentorship student. I personally coach you and advise you every single day and week. But you need to be able to see things and they will excite you. So price will be like boogieing on up and you'll want to just get into a buy position. But the problem with that is that's exactly what the market wants you to do. It's going to come back down, retrace in some way, 8 out of 10 times. You shouldn't chase. It's not going to work. I'll be candid with you. This past Friday, October 10th, I chased. I chased a few trades and I lost each time. I did very low risk, but it just hurt still. It wasn't good. I was avoiding all my rules and I lost. I got what I deserved. So always use your stop loss. Move stop loss to break even. Once it's at break even, no matter what happens, if price comes back down, you're not moving that stop loss. Psychological triggers, again, just things that will trigger you. It's very personal. If you take a loss, that could trigger you right there that you have to make it back. No, accept that you were a loser real quick for once, and you'll get a winner later that day or the next day, and you'll make way more than the loss. Accept it, move on. Confirm a minimum of 4 confluences. For me, I like 5+. Let's go over them. So first and foremost, you're longing in discount, you're shorting in premium. What do I mean? Well, you're going to, just like you see here with these white lines, you're going to draw your Fibonacci tool right here. You're going to use that to create a range, and you're going to go from 6 p.m. the day before to current price, high and low, to create your middle 50% line. And guess what? If price is above it, you're in premium. Price is below, you're in discount. So it just helps you that statistically, if we're in discount, we're probably going to come up, right? And if we're in premium, overbought, probably going to come back down. Okay, so premium discount, 1 confluence. Another, the fair value gap is being inversed by a singular fair value gap. It doesn't take numerous candles. It's a singular fair value gap. This isn't even a good example. Oh, yeah, it is. I mean, well, no. See, that this is okay. You have a singular fair value gap. These are just a couple extra candles. But ultimately, you'd want this first black or red candle to close completely over with 1 fair value gap, okay? Clear targets. I've always said this. Getting into the trade is important. Just as important, getting the fuck out. So S tier are going to be your data highs and data lows, your triple equal highs that are far apart, double equal highs, obviously equal highs, far apart, S tier. Below that, A tier, equal highs, triple equal highs that are close, not more than 3 candles apart, and just swing highs and swing lows, okay? So clear targets that you already see before getting into the trade. You need a liquidity sweep of some form, so we're sweeping buy side or sell side. The delivery out, so price coming down, sweeping sell side or buy side, and then delivering, bouncing out of a bullish or bearish fair value gap. That's your delivery as well. That's an added confluence. A protected higher low is an added confluence, and then ultimately just overall momentum. It did the sweep. There was just a wick, and then ultimately that singular fair value gap. So that's a bunch. There's, about 5 or 6 there. I like to take trades that have at least 4, if not the 5. The ultimate ones are also SMTs, smart money tools. So that's where the 2 indices are divergent. They are uncorrelated, and you've got ES sweeping some extra buy side where NQ does not. And that's exactly what happened up here. See how Asia high was here? This is Asia high over here. NQ couldn't get anywhere near it. So we came up, boom, and then dumped. Consolidated into a wedge and dumped, right? Easy. So easy. The last thing we talked about already, and that's journal and document. Not only the trade, but your emotions as well. It's so important to talk through and write down how you feel. Use ChatGPT. If you have ChatGPT, you don't even have to pay for it, but I think the paid version is a lot better. But just talk to it. Be like, listen to this. These are my emotions through the trade. This is how I felt. Please summate this into a small journal caption that I can then put in my journal. And guess what? You have a journal in the miscellaneous tab of the education section of the Discord. So right there is an Excel spreadsheet with different formulae baked in, and it's going to give you a dashboard if you want. And by the month, you can create new tabs, and you can have October, November, December, and then all your trades with a screenshot listed, entry, exit, P&L, this, that, time, everything. And then on the dashboard, it gives you, your average time in a trade, your number of winners of longs versus shorts, your win rate, all of it. It's yours, so use it. Okay, so that's pretty much the main rules of trading. It's going to be mostly the risk management and the psychology while supplementing in the strategy using an understanding of liquidity. So I hope that helps. and I'll see you in the live.